Good afternoon, everyone. My name is John Morton. I'm the Chief Operating Officer at the Overseas Private Investment Corporation, or OPIC. We've been pleased to have been participating for the last couple days here in a really extraordinary set of meetings and conversations with leaders in industry, government, the advocacy, nonprofit sectors, et cetera, and we're about an hour and a half away from wrapping up these 2 days of meetings. So we'll try to promise you an invigorating and exciting conclusion to these 2 days of meetings. Very briefly, for those of you who don't know OPIC, we're the U.S. government's development finance institution. Our job is to mobilize private capital investment into 160 some odd countries around the world. We do that by partnering with leading, innovative, entrepreneurial U.S. companies, many of whom are represented here on the stage, into some of the world's most difficult markets and most difficult industry segments. And as you've probably heard over the last couple days, OPIC has really leaned into the energy space and renewable energy in particular over the last 5 years. And we've seen our portfolio increase over tenfold in a 2-year period, such that we're now doing about $1 billion a year worth of investment into renewable energy. Most recently, we've really gotten quite intentional about looking for business opportunities in the off-grid and distributed power space. And I was pleased to have had the opportunity just a moment ago to have signed OPIC's largest investment to date in the off-grid space. It's a $15 million investment with Lumos for an investment that will lead to over 75,000 Nigerian households and small businesses gaining access to electricity either for the first time or reliable electricity for the first time. So that's a big announcement. That's part of the thank you. Part of the Power Africa initiative that the U.S. government has obviously been working on with great results over the last several years. So I think a couple of years ago, this conversation would have been considered a fringe conversation. You know, off-grid, it's out there, it's coming, but it's still a couple of years away. Today, I think we're able to say with the group that's sitting here in front of us that this group of companies and investors in front of us is making off-grid mainstream. It's making it bankable, it's making it a reality, and it's making off-grid access feasible and indeed a reality for millions of people around the world, not just in our country, Solar City here, but also throughout the developing world. And that's really, really exciting from a development and a development finance standpoint that OPIC occupies. So I'm going to introduce the panelists in a minute, but before I do so, I want to just applaud the group of people who are here who are business model pioneers. The challenge of off-grid electricity is no longer a technological one. It's about business models. It's about business model innovation. It's about how do you capture value from a difficult market segment in markets, whether they're in the U.S. and developed countries or in overseas markets. So I think the exciting thing about this panel is that you're really looking at people who are at the cutting edge of innovating with respect to business designs that didn't exist 3 or 4 years ago, and they're doing so with great success. So with that, I want to introduce the panelists. I'm going to go down the row, introduce them briefly, and then kick it off with a couple questions. We'll end the discussion with some questions from the audience. So if you have some, please get them ready. Christopher Horner is president and CEO of PowerHive and has been in that role since 2011. He was previously the founder and CEO of Better Energy Systems, and Christopher has been active in Africa and in energy issues for well over a decade. Next, we have Paul Needham, who's the CEO of Simpa Networks and has been in that role since 2010. He was a technology entrepreneur for years before that, including for a period of time at Microsoft. Next, we have Marco Krapels, who's the Senior Vice President for Strategy and Global Markets at Solar City. Marco has a couple decades of experience in the banking and financial services industries at Rabobank and Pegasus Capital before joining Solar City just several months ago, and is now leading a very ambitious global strategy for Solar City. And finally, Dipender Saluja, who is the partner and managing director at Capricorn Investment Group, who is an active investor in this segment and who will share some thoughts from the investor side of things. He has a background in electrical and computer engineering and a long history of building and managing companies in the electronics arena in particular. So I'd like to welcome our panelists. I think we're in for a great discussion. And I want to start by just going down the row, 2 minutes each. And if you go over 2 minutes, that's going to cut into your speaking time that follows, so beware. 2 minutes each on who you are, the company you're with, your role in the off-grid market, and your vision for the next 3 years. 2 minutes.
Sure.
This is the elevator speech.
Okay. So my name is Christopher Horner. I'm the CEO of PowerHive. Thanks for the introduction, and great to be here. So PowerHive was started in 2011 with a goal to deliver a very high level of energy services to emerging markets, focused primarily on the microgrid space. And the reason we focused on the microgrid space initially is that it's a very scalable sort of way to deliver energy that actually provides a very high level of utility to our customers. So within a microgrid setting, you're able to provide sort of businesses as well as residential customers with the ability to do things like welding and run refrigeration and things that actually, create new jobs and really get people out of poverty. So today in Kenya, we are the second company in the history of Kenya to be a licensed utility. So we broke a 53-year monopoly in Kenya. We've been able to now aggregate a project which we are now shovel-ready, and tomorrow I think we're announcing our the commitment from OPIC. So the first real bankable project of its kind in a microgrid sense. And so it's a really interesting time for us because we've actually been able to put together all these pieces of the puzzle in such a way to actually finance these projects. And next year we'll be serving about 100,000 people in Kenya as, again, this is the second utility in the history of this country. So, yeah, we're really excited about that. That's our doing.
Thanks, Richard.
Yeah, my name's Paul Needham. I run a company called Simpa Networks. We work in India. There we're called Simpa Energy India. India's got a massive power deficit and a huge market opportunity for what we're doing. There are probably 500 million people with either no access to electricity or extremely unreliable access. I don't mean like a few hours of power cuts a day. I mean like less than 12 hours a day of electricity. Our mission is to make clean energy simple, affordable, and investable. And we really think about that investability as core to the business. From the beginning, we looked at the consumer needs, and we realized that to solve that problem at scale, you've got to use a for-profit commercial approach, and you've got to be able to mobilize commercial capital at scale so that you can offer some sort of end-user financing to your customers to make it affordable. So we think of our two customer segments. There are our farmers and our small shopkeepers in rural India who are our customers, but our other customers are the investors for whom we're really creating investment opportunities so they can invest in this sector. As I mentioned, our customers are small shopkeepers and farmers in villages and small towns. Our product is a solar home system. So there's a solar panel, there's a battery, there are LED lights, there's a fan, you could maybe run a TV off of it, you can charge your mobile phone. But that product is not really the innovation. The innovation is the business model. It's how we sell it. In fact, we don't sell the product, we lease it. And we lease it by integrating our own prepaid metering technology into the product, so the customer has to prepay for service. And then the meter counts down the days, and when they run out of credit, it shuts off, and they, of course, need to go recharge again. So it's very much like a prepaid mobile phone. So that's the pricing innovation. There's some innovations on the back end around the financing and how we structure that as well. And of course, there's some big innovations around the sales and distribution model, the way we recruit and train young people from the villages to become our sales agents and to become our solar technicians. That's
Great.
it.
Thank you.
So Marco, Solar City, it's really great to be in this panel, very distinguished panel. And want to also just applaud what OPIC has done in gathering what I call like a knowledge repository in the last couple of days. I think this is great. Like for us, as we are expanding globally, to be able to tap into this resource base here, and the people and the entrepreneurs who are already abroad, and what we can learn from that, and how we can help accelerate that is extremely valuable to us. So really, really happy to be here, and thanks for having us. So SolarCity is the U.S. largest residential and commercial solar energy provider. We don't sell systems, we sell power. We sell electrons. And we sell electrons at a cost and at a fixed price that is lower than what our customers could otherwise purchase those electrons for from a utility. So our business model is very, very simple. We sell clean power at a lower cost, at a fixed rate. And so that's gone very well. We've been around for 9 years. And over 9 years, in the last 9 years, we did 1 gigawatt. This year alone, we'll do more than 900 megawatts. So you can see how fast this is scaling. And the reason why it's scaling, it's very simple. Utility rates, even with natural gas prices at an all-time low in the US, utility rates rise. In our key markets, the 19 states that we operate in the United States, utility rates have risen 42% since 2002. If you run a business or you have a home, that's just not cool. It's not nice to pay 42% more for electricity every 15 years. So if someone comes to you and says, hey, you've got real estate, you're not using it, let us put solar on your real estate and we'll sell you the electrons, that's been a great business proposition. And so over 9 years of time, we've deployed 280,000 power plants. And those have long-term revenue streams that are highly predictable because the client does not have an economic incentive to default. Because when a client makes a choice between I can not pay SolarCity and go back to paying more for dirty power, or I keep paying SolarCity and I pay less for clean power, they always choose to pay less for clean power. And so that's been a great model for us, and we're taking that abroad. And we recently made an acquisition in Mexico, and we'll be discussing some of the other opportunities in this panel.
Hi, I'm Dipender, Saluja, and great to be here on this panel. We were just chatting before the panel that I'm fortunate to have connected with everybody here over the past few years. Flew 20-odd hours to visit PowerHive's operations in Kenya, and Paul took me on a 10-hour wild ride in rural Karnataka to go see Simpa installations. And of course, I've made the 30-minute drive to SolarCity as well. We are a private investment firm based in Palo Alto and New York. We invest about $5 billion around the world in a variety of asset classes. Our favorite theme to invest in is renewables, and that's the area where we are spending most of our time in. We also invest in technology, being in Silicon Valley, that's sort of a natural fit. We also invest in healthcare as well as real assets like agriculture and other things. Within renewables, which is sort of the topic of this conference, we have invested quite a bit in things like electrification of transportation, again, companies like Tesla and others. In solar, we're very fond of solar, and we'll talk a lot about that, I think, in this panel, hopefully. Companies like Sunpreme and others, both upstream solar PV technologies, as well as downstream where we're invested in deployers of solar. We're also very fond of energy storage. I think that's an area that we're putting a lot of work into, and we think, as we've discussed over the last couple of days, that's an area that's really important, both from an innovation as well as scaling point of view. New materials, power electronics, energy efficiency. We also do a fair amount of work in water and agriculture, which has an interesting nexus, again, of energy and food and wellness in general. We have continued to be very active. As the secretary mentioned about an hour and a half or 2 hours ago, investing in renewables was a very fashionable topic 10 years ago, 15 years ago, maybe more 10 years ago, and then peaked and then fell out of favor. And while that has generally been the case, We think this is a great place to invest. We think there's an opportunity to build several $1 billion, several $10 billion, several $100 billion companies in the space, and to do it profitably and with very positive impact in the world, all around the world, whether it's here at home in the US or in Africa or Asia or Latin America. And so with that mindset, we are investing in this space, again, across asset classes. We do a fair amount of venture investing in the space, so we back high-risk companies that are early stage or developing new technologies or developing new business models. We do project finance across the board in the deployment of these technologies as they get ready for deployment. And then we do that in the form of debt, and in some cases we also do it in the public market. So it's really across asset classes. I look forward to more detail when we talk more.
Great. Thank you all very much. So my first question is one that I think is potentially applicable to all of you, and so and then I'll come at you with more specific questions for each of you. And it regards the question of the what's the current limiting factor in your expansion plan. So solar prices, for example, have come down precipitously, as we all know, over the last 5 or 6 years. My guess is you would have said 5 years ago that the cost of solar was, and the panels were the big impediment to roll out. My guess is that's less the case now. My question is, looking forward, what are the types of changes that you expect to see in your respective industries and business models that will allow your businesses to expand faster than you are today? In other words, what are we not thinking about now? The panel costs have come down significantly. What's next? What can we anticipate next? Christopher.
So I think what we look at in terms of when we think about our expansion plans, we've overcome pretty large hurdles in places like Kenya in terms of the regulatory environment. So our hope and what we're really helping to make happen both in Kenya and other markets that we're looking at is to help shape a regulatory environment that understands the true cost of generation and distribution of electricity within a microgrid setting, and what that actually means in terms of to that country that we're working with. So we think regulation will get we have an opportunity to really shape that and therefore help sort of streamline the processes. A good example is we're right now working on a land reform act that requires a presidential exemption, which we will get, which will actually streamline the process for all renewable energy projects in Kenya and shorten the time to actually develop and deploy projects by about 6 to 9 months. So that's exciting. So all these little things, there's obviously in the development framework, you have a checklist, and these are some of the things that you navigate. So there's been a lot of investment and a lot of time figuring that kind of thing out, and so we really hope to see that really streamline things for the industry moving forward.
So in other words, you expect that the biggest single driver going forward that you haven't seen yet is positive, progressive government action to enable this type of rollout.
Both here and abroad.
Yeah.
Predictability is key, and understanding and being able to size risk in these markets is a challenge, and so this is one of the big things that people need to understand.
Great.
Access to capital is what is holding back so many of these solar as a service businesses, whether you're doing microgrids or you're doing solar home leasing, pay-as-you-go solar. We've been very fortunate. We've got a great set of investors. We've got, of course, we're working with OPIC. We've got investment from Asian Development Bank. We've got Schneider Electric. We've got Vinod Khosla with the Khosla Impact Fund and GDF Suez. But you hear those names, they're all foreign, that is non-Indian. There are so many energetic Indian entrepreneurs that I meet that do not have access to the foreign capital markets in the way our company has had access to them. And the Indian banks are very conservative. They're waiting to see a company have 2 or 3 years of profitable operating history before they'll extend a loan. Very simple rule. As a banker, you don't really need to understand the details of everybody's business and everybody's product. But if you can look at the financials and see that this company, whatever widget they're selling, is profitable over the last 2 or 3 years, you're willing to make a loan. Well, many of these businesses are not yet profitable. If you're offering credit terms to your customer, you need to borrow money first so you can finance the asset and rent it or lease it to your customer. So I think something that's really holding back the sector in India is a lack of access to domestic capital.
I think you called it, access to capital, really, really important, but it's also important to prove that the asset class is an investable asset class, right? So what SolarCity has done in the last 9 years in the US is we have 280,000 payment streams that we've proven is an investment-grade asset class, right? The cumulative default rate of our entire portfolio is less than the default rate that the utility experiences with its residential customers. So it's less than 0.5%. That's a cumulative default rate over 9 years of being in business. And so when you take that to Standard & Poor's, you take that to Moody's, you take that to Fitch and Kroll's, people understand, okay, that's good. So you got, you're sizing the debt against a discounted value of the cash flows. You've got ample debt service coverage ratio. And oh, by the way, you have a cumulative historic default rate of less than 0.5%. So we've raised over $8 billion of project financing, and everyone is being paid back. And so we've proven that there's a great asset class here. I think what's really important as we go abroad is that we develop those capital markets as well. It's great to have OPIC and others get us the first financing, right, to jumpstart this. But then as we prove that there is an asset class and as we collect the data, because software is really important, collect the data, collect the performance, prove that the asset class behaves in a similar fashion, and then develop capital markets around that. And I think it's really, really important. We've done it here. I know we can do that abroad. And when people don't have an economic reason to default, or if they default, they have no power at all in certain cases, right? I think this is going to prove to be a really, really strong asset class abroad as well.
I would add to what I think they've already covered. Maybe as an investor, I'll add to that same capital issue is that there's been a lot of people that have left the building in this space over the last 10 years. And we see some of them coming back, and that's great. So I think right now there isn't that much risk capital available to invest, and I think this space deserves a lot more risk capital. On the project side, I would just add to what the three of them have said. I think access to appropriate capital, risk-adjusted, a role that you guys play very well abroad, for example. So if you look at some of these countries where the needs are greatest, and the sovereign rates versus the return or the yield is something that causes a big challenge for investors from here to compete for that capital. And so low-cost debt, for example, which doesn't require to be hedged, or local currency debt would be huge in getting most of these companies help to scale.
I'd be curious just to pick up on that a little bit more and understand, Dipender, you said a lot of the folks who financed or who looked to finance this space years ago have left the building. They were there, they dipped their toes in, probably got burned, have left. Are you beginning to see them come back in now? Because you're kind of the canary in the coal mine to some extent from your mission and alignment standpoint in this space. I would imagine you might have some leading indicators of people beginning to move back in.
We are seeing some people come back, but not nearly enough, and not nearly all of them. I think the secretary hinted at that earlier as well, right? I think people have to figure out what's the right type of capital, what's the right term. All of us in Silicon Valley have gotten very spoiled with the software model. But the irony is most of Silicon Valley was originally built on hardware and semiconductors, which is similar to this space. So if anything, we need to go back to the mindsets that existed 30 years ago. And some of that capital is coming back, but it's nearly not enough. What we are seeing is more and more individuals, more and more families, more and more endowments and foundations are beginning to come back in and looking for ways to come back in because it fits their dual sort of profit motive as well as having a positive impact on the world. And I think this is a space in which you can do that without compromising the profit side.
Okay.
Here's
please.
We have a massive opportunity. We've raised funds, both tax equity and debt in the debt capital markets. We actually don't rely that much on the equity markets. Most of our capital is raised in debt capital markets when you bundle these leases and you monetize the cash flows in the debt market. But we do have a group of investors as well that are some of the Fortune 20s, more technology-minded companies. One of them is here today. I mean, it's public. Google is one of our investors in our tax equity funds. Great partner. They announced their investment in Kenya on the wind farm. I think there are Fortune 20s, the technology companies in particular, that are already very familiar with renewable energy in the US because they've invested in funds here, that have literally hundreds of billions of dollars of cash sitting in Europe that cannot be repatriated for Subpart F purposes. And so I think they have affinity with the asset class. They know how it performs. I think they really do care about clean energy development in the developing world. That is very important to some of these companies. And I see an opportunity there for us to unlock some of that capital, along with some of the other capital that's available, to really do this big scale, because these numbers are going to get really big, like really big. Like if if we did a 10 kilowatt system, and you do 25,000 homes a year in Africa, and these are the higher end homes maybe, that's 250 megawatts. And whatever the build cost is, if it's 3, 4, 5, but you're talking about billion plus. I mean, just out of the gate, right? So the numbers are going to get really big, and I think we need to be clever about unlocking capital that's not in the US, but it's sitting there. And I think that there's a massive opportunity for us collectively to make that happen.
So next questions I want to have get to the question of the limitations of off-grid, in particular, perhaps the limitations that are perhaps embedded in the Simpa and PowerHive models, and that is the following: to what extent is the battery, the future of the battery, a critical piece of your business models and your being able to provide what will inevitably become the next level of demand from the companies and households that you are currently servicing? There's a lot of people who say in this town, frankly, off-grid, it'll never get there. It will never provide enough power for the poor Africans. They deserve better. They deserve high transmission lines to come into their homes. We have doubts about whether that will happen in a timely fashion. Tell me a little bit about the battery and the future of the battery in your business plan today. Christopher, start with you, and then how that factors into Simpa's potential future plans.
So for us, I mean, the battery is obviously a very important part of the overall system architecture. But in terms of a limitation, I mean, the limitations that we look at, those sort of limitations are sort of accounted for in the overall project finance model, right? So initially, we're using lead-acid batteries in our deployments because they're really well understood. We know how long they're going to last. There's a recyclability aspect of those. And so, but we have built in the project finance model of all of our microgrids sort of replacement in 3 to 5 years of those batteries, at worst case scenario, right? And at that point, the price of lithium-ion batteries will have come down significantly, and then we'll replace those with these new batteries. So, we don't really see a huge limitation or any limitation right now because of the battery aspect of this, because of what the business model is able to support and what people are able to pay for the electricity.
So your grids provide power, your microgrids provide power. How much?
So 24/7.
Yep.
Electricity, providing each one of our microgrids can provide around 25 kilowatts, shared amongst around 200 customers.
Yeah.
So what's nice about that is that people have the optionality again to sort of use other irons or whatever, blow dryers or other salons, things that are actually high power limits. And if they had to buy a single home system for that, it'd be very, very cost prohibitive. So the average cost on our system is around $400 to $550 in Kenya, and people are paying around $10 a month on average. So it's the model works. People really love the access. There's certain areas that we can't necessarily reach at this point because people are just too distributed.
Yeah.
But the microgrid space is we understand it well, and there's a huge number of households that we could serve in Kenya alone. So.
Yeah, we I mean, we made the conscious decision to not try to innovate so much around the product. There are a lot of great companies out there developing new battery technology. Of course, so much work being done on improving panels, LED lights, etc. We just sort of choose best-in-class components and put it together as a really simple solar home system product. Again, the product for us is not the big innovation. When better battery technology comes along, we'll use it. We're not using lithium-ion today because we've not seen it being tested in the sort of 45, 50-degree Celsius environment that Western Uttar Pradesh and India can get to sometimes in the summer over any length of time. So we're stuck at the moment with lead-acid batteries. Good thing is, one good thing about lead-acid, at least in India, is that if you sell lead-acid batteries, you have to take it back and recycle it. So we buy from a very well-recognized brand in India that the consumers recognize and that we know has a really good reverse supply chain to take back those batteries. I think the challenge is that consumer demand scales very quickly. So, we might start a customer with 40 watts, and a couple months later they want 100 watts, and then they want 200 watts. Some customers follow that path, some don't. Some buy 40 watts and they never even use it all. So to this question of, is it real power? Is it, it's not as good as the grid? Well, look, the grid's not there. It's not coming anytime soon. I think there are as many people today unelectrified in India as there were 10 years ago unelectrified in India, because population growth has been faster than the grid growth. So in our case, we see solar is the cheapest way to get electricity into the home. It's the fastest way to get electricity into the home. And people deserve the best possible power they can afford. We offer a range of products, and people choose the product and the price point that they can afford, that makes sense for them, that meets their energy needs today.
Do either of you want to comment on the battery question, Dipender?
I think the good news is that for the most part, there's enough technology that has gone past that tipping point to make this possible today. And I think Chris and Paul are examples of that, where they don't have to wait anymore and they don't have to rely on innovation to kickstart their business. They've got a business with what's available off the shelf. In fact, SolarCity falls into that category as well. Having said that, the big innovation and the big disruption has been in one of the components, which is solar, where solar prices have fallen 5x in the last 10 years, which has been an amazing and beautiful thing for these businesses. Batteries haven't done that. Lead-acid batteries are largely dependent on the price of lead, and that has tracked that for the longest time. So that is the area where the least disruption has happened from a lead-acid point of view. Lithium-ion has clearly been a huge gift, largely driven by the PC industry, and now by the electric vehicle industry, where just orders of magnitude, the largest PC companies, which used to be Dell and HP, all the batteries for all those PCs make probably 10,000 Tesla cars today. So the amount of volume that is going to go up in that space is going to be phenomenal, and it's going to have lots of ripple effects on their businesses as well. And then there's new battery technologies which will build even upon that. So I think if you start seeing the innovation in energy storage, you will see that same kind of disruption, and that'll have a multiplicative effect both on cost as well as affordability. And then the same with power electronics and some other things. So I think those three legs of the stool, which is power electronics, solar, and batteries. Batteries clearly have the longest way. On your earlier question of, this town says grid is what's needed, sometimes, some people. And I think that's a debate that we had yesterday as well in the afternoon. I think pretty soon it's going to be similar to you trying to tell people to hand in their cell phones back because you're offering them a landline. Or you're going to go to rural Africa or India and say, you know what, I've got this wonderful thing called a landline that I'm going to build to your town. Why don't you hand in your lousy cell phone, and you know how many takers you're going to get for that. And I think that's what's going to happen once distributed energy really gets out there, and you're already seeing that. And there is almost no doubt in people's minds who are close to this that that's just the last gasp of the incumbent.
Marco, why don't you answer this? But also, I want to. This would be a great opportunity for you to tell people what is public about SolarCity's expansion plans into international markets, because I think there'd be some appetite to learn more about it.
Sure. No, I mean, on the battery side, I'm a little biased because our chairman Elon Musk is also the chairman of Tesla, and I don't know. Has anyone seen the Tesla Powerwall? I mean, that's one sexy battery. Like you look at that, you're like, wow, that's a battery. Like the design and the curves, and it's a beautiful battery, right? But the advances we're seeing there are amazing. I mean, it's really incredible. Like if you see the cost decline, right? I was a recipient of the pilot battery, which is that was 2 years ago. They put this big box in my garage, and they've been testing, charge, dispatch, and running the cycles and all that. But it was not a very pretty battery. This is a very nice looking battery, but the functionality is really important. So here's what I see. I see even in Africa, like you look at Nigeria, look at Kenya, you look at South Africa, maybe Rwanda, where there is some grid, but I think you can actually overlay a distributed grid onto the grid that already exists. And picture this. Every home has a 6 to 10 kilowatt solar system. It has a single inverter. It has a battery. Could be a Tesla battery, could be LG. Ours are probably going to be Tesla. But it has a battery that can run daily cycles, and it will serve two purposes. It will provide power forever to the customer, the homeowner, so there's reliability, and we will connect all these homes, and we will provide a very important peak demand service to the utility. Because you have the future there, and I think this is absolutely possible in Africa, is you build a distributed grid that is connected, and we've developed a lot of that software. Our founders are software engineers by training. But to connect the distributed grid and to provide not only reliable and cheaper power to the homeowner, and you can turn off that diesel generator that runs all day long in certain instances, but you also can provide a very important service to the utility that has all these peaks, and we can load shift, we can connect the appliances, we can provide peak demand services to the utility, we can program the battery so the battery always has 50% capacity for the home, but the remainder we can dispatch to the utility when they need it, and we have two revenue streams. One is the PPA with the homeowner, and the other one is a revenue stream from a service that we provide to the utility. And I think doing that in international markets, in certain cases, may be easier to do it here because a lot of the utilities here are rate basing, right? So a lot of utilities here actually can't make a profit on energy as a service. They have to build infrastructure and power plants that we actually no longer need to meet peak demand, and they can charge a profit on the infrastructure that they build. Now, this is a very long answer to what do I see as possible international? How do we leverage technologies and what we've learned in the last 9 years? And how do you apply that in markets such as certain African markets where people have willingness and capacity to pay? Now, for SolarCity, the markets that I find interesting and that we're going to be expanding into are markets that just intuitively make sense. There's a lot of sunshine, a lot of sun hours, high radiation. We went into Mexico, you got 1,600 sun hours, same as Arizona, great market. We also like to see we really want to understand utility rates. We want to understand how electricity is priced. And so when you see a utility curve that just goes like this, and you see a solar and storage curve that goes like this, you're hitting these inflection points. So we found a great addressable market in Mexico that will only expand as utility rates continue to rise. I think the CFE is running a $3 billion loss this year. So at some point, you got to raise rates because that's not economically viable. So Mexico is really interesting for us. 16% of our employees are Latino. We have a lot of Spanish speaking already, now 13,000 employees. And it's right next door. It's a short flight. Cabo is great. But the 122 million Mexican population, the per capita use of electricity is increasing, and the need for reliable power is important. And it just makes sense from an IRR perspective. I think we'll do more. There will be more opportunities in Latin America overall. We're definitely looking at Europe. I think what's really important, if you don't have a higher radiation, then you do need some mechanism like net metering. I'm not a big fan of feed-in tariffs because they come and go and depends on the government and depends on budgets. Net metering, I think, is a really important a mechanism because storage and NPV does not make economic sense everywhere. It makes sense in some places. So in the absence of that, you do need net metering. And I think there's about 10 countries that are very high on my radar right now.
So let me ask something, Christopher, you mentioned, which was when you were talking about the obstacles to expansion. It was government policy, where regulation was the one you cited. If you each in your own organizations and from your perspectives could ask for one or two government policies that would enable your more rapid build out and success, what would they be in your respective companies? What do you need in order for further success from the governments of the countries in which you operate?
I mean, the first one that comes to mind again is land reform in a lot of the markets.
Of course, you're dealing at the bigger level. You need to get land near a settlement, and there's issues regarding who owns it.
So I mean, we're following very closely, what the telecom tower industry has done in a lot of these markets. So they've actually paved the way for us in many respects in terms of their processes, how they actually deploy telecom towers is not too dissimilar to how we actually deploy microgrids in these markets.
How much space do you need?
It ranges anywhere from 1 to, let's say, 2 to 5 acres of land. So from an environmental perspective, and getting those approvals is fine, but it really comes down to sort of land reform when you look at succession issues in some of these markets and title and things like that. Okay. So getting institutional investors comfortable with certain or if there's a lack of that, there's a certain there needs to be more sort of assurances from the governments to say yes, if they sign this, we're going to uphold that. So I think that's the one thing that comes to mind. Okay. There's a number, but that's the main one.
Yeah, there's a problem in India, which is the kerosene subsidy. So kerosene is the poor man's fuel, and for good historical reasons, that fuel's been subsidized, so people have, cheaper access to that kind of energy. But now that makes it very difficult for solar to compete because because of that big subsidy. So I had a really funny opportunity. I had all these air miles, all these points, and I was traveling back from JFK to Delhi, and I think it was JFK, but there was a direct flight with Air India. So I had all these points that had accumulated for years. I was never able to use them, so I just put them all down and got upgraded to business class, and then they upgraded me to first class in Air India. The only people who fly first class in Air India are the ministers. The Indian ministers. So there I was for 14 hours sitting beside the Minister for Petroleum and Natural Gas who controls the kerosene subsidy. So I had him for 14 hours and the poor guy couldn't sleep. I just kept telling him what he needed to do with this kerosene subsidy.
That sounds like a flight from hell. From
It was awful. Honestly, when he got off the plane, he ran. Right. He ran. I was winded trying to catch up to him, but I got him. And I told him again, he's got to cut that kerosene subsidy, and actually they are making some progress there. They're sort of they've done something with cooking gas and the subsidy there, and they're trying to do the same thing with kerosene. And they're sort of digitizing it and involving direct payments to the consumer, which then will allow them to offer that kind of direct payment, even if the customer is choosing clean energy or dirty energy. So they're trying to level the playing field. So I hope it was worth it.
Margot, anything from your side?
Yeah, maybe not necessarily a policy issue. Right. I mean, net metering would be helpful. Yeah. But I think that just an infrastructure bank. I think it's really important. Brazil has BNDES. We have OPIC. I think some of the larger markets, when you have an asset that has an economic useful life of plus 30 years, 5-year financing just doesn't cut it. And so local currency financing, 20-year money, at either local currency or a currency hedge for 20 years. I think that really will unlock a major market opportunity.
Great. Do we have, we started, 10 minutes, okay, that's what I was looking for, because I know we started late and I wasn't sure when we were going to end. Okay, we're going to move to take questions in about 3 minutes. What I want to do is do a quick round here of your, the biggest failure, biggest lesson learned of the last 2 or 3 years in your respective businesses. What has been the hardest lesson that you've taken away, and how is that being incorporated now into your thinking? I don't know who wants to start with the question. I won't go down the row.
Go to the end.
Yeah, Dipender, from an investment standpoint, I mean, where did you guys take a bet that didn't work, and how is that informing your investment thesis for the future?
I think there are obviously in the investment business is littered with great ideas that don't make it, and it's very often things like, some of them are cliche, but in our investment business, the team matters so much. Everybody thinks that once you have a great solution or a better mousetrap, you're set. But no matter which success story you admire today, if you go back in and look at their history, they've had lots of ups and downs, and some of the companies that we all admire and have been admiring for the last couple of days are examples of that. So I think that's almost cliche, but the team aspects. I think in the kind of investments we're talking about here, that intersection of policy and local markets versus better mousetrap are really tough nuts to crack, because you can end up with a solution that is just so obvious and so technologically superior and so positive from all other aspects, but the environment for rolling it out or deployment is just not there, and there's a tsunami against that. And making those connections are really important. I think those are some of the problems that these guys are also solving.
And I will note quickly as we go down the line that it's interesting that our panelists are focused on an individual market. I think getting it right. We didn't talk about expansion plans beyond your markets, but I think one of the lessons that we've seen certainly is that someone who does it well in one place doesn't necessarily do it well if they move across borders because of those very issues. I think Solar City will prove us wrong and take a model that has worked very well here, and I think roll it out very judiciously, and we'll be anxiously, watching their success in other markets.
In solar, and I think that will extend to Solar City as well, is that if you look at the big success of solar to date, if you look at the 170 gigawatts that has been installed, a lot of it was in the Western utility model, which was largely about generating electrons and generating clean electrons to replace dirty electrons. But having the grid and having that infrastructure was a very convenient way, and the technology from panels to electronics is all designed around that. Sure. Shifting that to the types of markets that we're talking about requires a different level of innovation, because now you're talking about people being actually able to use those productively, being able to use those electrons in isolation, if you may, without the grid or with a poor grid. And one of the most common complaints that you hear about solar and heard about solar over the last several years in those countries was somebody came and installed a solar system the way they had installed it in Germany or the US, and it's useless for me, is the most common complaint. And so that is a very good example that you use. Net metering, Marco mentioned. Net metering is a wonderful thing to manage that distributed deployment in the West. And most of the countries that we're talking about today don't have net metering. In fact, most of them are trying to deploy it. So in the absence of net metering, a model that's working really well here is not going to work abroad.
Okay. Marco?
I mean, when you build a business from scratch, you make mistakes all the time, right? But over the last 9 years, I think we've done a pretty good job here, and I think we can do that abroad, partnering with the right people, understanding local cultures. I think in the U.S., what's been hard is, and I think, well, we're recognizing it for sure, but the incumbents, right? Some of the utilities seem to feel so threatened. And, you can do two things, right? You can fight them, or you can actually say, hey guys, we're going to have 1 million customers in your zip code with solar panels and connected battery. We can connect that. we may need to change legislation so you're allowed to buy energy as a service from us and then sell it to your customers and make a profit on it, rather than have to build a power plant in the desert that we don't need for most of the day. But that dialogue and that conversation is not easy. And we definitely want to partner with utilities, and I think we're going to get there once we have the critical mass and people see that this distributed infrastructure really is there and has a dual benefit for the homeowner and for the utility. But that relationship is a delicate one.
Yeah, great.
A big mistake we made early on was with our sales and distribution strategy. So, as a startup, we didn't have much capital. The advice from our investors was what we were thinking too, which is what we're trying to do is really big and really complicated, and it's going to take a lot of money. Let's partner for really critical pieces in the value chain so we don't have to go build it ourselves. So we partnered with existing solar vendors, companies already in India, already selling solar in rural areas. And our hope was that we could bring our finance and our prepaid metering technology and leverage these other companies' sales and distribution channels. I mean, that makes sense. That's what you would do here. You wouldn't try to build the whole thing. What we found was that we couldn't get that to scale. For them, we were just one of many partnerships they were trying. For us, it was existential. We were, burning through our money and unable to get any scale out of somebody else's sales channel. So we realized that we needed to become more vertically integrated. We realized we needed to be more like Solar City than, say, Clean Power Finance. We had the wrong business model. Once we realized that, we had to raise more money. Yeah, we had to raise more money because being vertically integrated is tougher, and there's more to do, more execution risk, but less partner execution risk.
Great. Christopher?
So, thinking about all the things, all the various mistakes we made, it's,
Where do you begin?
Yeah, where do we start? No, but, I think, some of the key lessons that we learned over the past 3 years of operating microgrids in Africa have really created some amazing innovation for us. So a couple examples, one example is it took a lot longer to, get some of the necessary permits, the concessions needed to actually make these things bankable in the first place. So that's one big overarching thing. But more specifically, we learned through trial and error how to size a system. We have a tremendous amount of data from 3 years of customer usage to understand that aspect of this. And then through other just operations and maintenance mistakes that took place over the years in terms of a broken wire or how people were stealing electricity was something that we figured out how to work around, and we use technology to actually now detect theft in a way that's never been done before. So those are some of, I don't know if they're mistakes, but they were things that we certainly learned, and we didn't see those coming, so it was definitely interesting. But, yeah.
Excellent. Well, I think our next speaker has actually arrived, so I'm going to, may I beg indulgence to take one or two questions? We started, one question. We started about 50 minutes late, so I was just wrapping up. If there's a question out there, if there isn't, we're happy to wrap up early. I can't see through the lights. There is one right here. Sir, please. If you could introduce yourself, state your question, and then we'll answer it and then be on our way, please. Could you use the microphone, sir? Thank you.
Question to Marco. Why do you feel the Solar City model is going to work in the emerging markets in a 20-year lease with a fixed price? I think in part because the solar price is going to decline very dramatically. And what you might end up with a situation, consumers holding assets that are worth a lot less very quickly, and then they have to pay for something they have paid for 20 years.
Thank you for the question. Marco,
it's a great question.
A quick answer.
Yeah, absolutely. I absolutely am not saying that we're going to offer 20-year leases in emerging markets. We have a lot to learn. I don't know what exactly the right product will be, but what I do believe is that there are millions of people that would like to buy power at a fixed rate that is cheaper than what they can otherwise generate it for. And that also provides more reliability. And what the right model is on delivering that's something that we're still working through.
Let me just say that I want to thank these panelists. True business model entrepreneurs attacking the single biggest and most thorny, hairiest issue of providing energy to folks living off-grid in rural India, in rural Africa, and with Solar City looking to expand into markets around the world. I think it's an extraordinarily exciting time. Dipender has been on the investment side for years and years. I think this is you've been fortunate to hear about some true business model pioneers here, and in 2 years when we have this panel again, we'll be hearing about their successes that have gone well beyond where they are today even. So please join me in thanking our panelists. Thank you.